Hello guys, welcome to today's videos on market structure. Going on with trading without market structure is a mistake most newbies find themselves doing. And the greatest thing about market structure is how it has been hidden from the internet, the beginning of our journey from babypeeps.com. When you finish reading the whole of Baby Peeps, you hardly see anything based on market structure. And that hidden piece has caused so many mistakes and losses in the forex market. So today we are going to be talking about the market structure, its usefulness to the chart. We are going to be discussing its complexity, and we are going to be talking about the rules. I'll be giving you people rules on how to trade market structure. Now, the first thing I want us to understand about market structure is this. Market structure determines the reversal and retracement of a particular pair. Market structure determines the reversal and retracements of a particular pair. And this is based on the time frames we have, based on the time frame sequence. Based on the time frame sequence. And the time frame sequence, like I said, we have the main time frame, the weekly, the primary time frame, the entry time frame, and the intermediate time frame. Now, when price breaks below the main time frame, when price breaks market structure below the main time frame, we are going to have what we call a retracement. But when price close above, when we are buying, it closes above the market structure from the bullish angle, then on the main time frame we're going to have a bullish market. So guys, I'll be showing you guys how market structure is being traded. Now let's go into this. Now, as you can see my chart, this is for a bearish market. This is for a bearish market. Now, market structure is that particular pattern the market moves with. We all have a moving style, the way we move, the way we walk, and the way we do our things. And that is what market structure is for. Market structure deals with the pattern, the way price moves. Now, in a bearish market, this is a bearish market, price makes a low, go back to make a lower high. When it breaks this particular low at this level, this particular low, we then have what we call the beginning of a bearish trend. Now, like I said, price must close. Look at the rules for market structure. Price must close below the lower low for us to have a new market structure level. Now, what is the market structure level? The market structure level is that ultimate point. That ultimate point, as you can see here, the lower high for a sell are always market structure levels. Now, we can only have one market structure level in a particular pair at a particular time frame. Now, this is our market structure level here. Now, when price close below, this also is a market structure level. Sorry. This also is a market structure level. This also is a market structure level. This also is a market structure level. Now, as you can see, we have 4 market structure levels on our chart. But I said at a particular point in time, in a particular time frame, we only have one market structure level. Just like the neckline of our trend line, the market structure level is that particular level we want to see price breaks upward before we consider the reversal of market movement, the reversal or the retracement of market movement. Now, this is a lower high. When price makes a lower low to this point, let me clean all the market structure levels we are having on our chart. Now, when price breaks this lower low and make this lower high moves here, let's assume we are not seeing all these particular movements. this particular lower high, the previous lower high, becomes our market structure level automatically. Now, when price breaks through this particular lower low, and drops, automatically this here automatically becomes our market structure level. Now, when price breaks this lower low again at this particular level and drops to form this particular lower low, automatically our market structure level changes, like I said, to the previous market structure level. So automatically this become our previous market structure level. Since this is our previous market structure level, all right, trying to pick this up. Now this become our previous market structure level. Automatically, this our previous lower high becomes our previous market structure level. What am I trying to say? I'm trying to say this, that the previous market structure level, lower high rather, for a sell, become our market structure level. So you want to know that your previous market structure, your previous lower high, when you are looking for a reversal to the buy side, the previous lower high before the lower low is what? Our market structure level. Now, price breaks this particular low. Price breaks this particular low, this lower low, breaks this particular lower low, then move up. Now, automatically, this becomes our what? Our market structure level. Yeah. This becomes our market structure level. This particular area here becomes our market structure level. Yeah. As you can see. Now, this is the turning point. Now, Root 2 said, the wave that will break market structure must clear the previous lower low for a buy. Now, it must clear the previous lower low. That means it must create its own lower low. Now, this is the lower low it created. This. You can see my rectangular box there. It created that lower low, then did what? Push up to break our current market structure level. It breaks our current market structure level, which is at this area. Now, this is the lower low, the previous lower low. Now, what happened here? They cleared liquidity. They cleared liquidity at this particular area, then they shoot price up. Now, this is market structure for you. Now, listen, the market won't reverse until we have a break of market structure. It won't retrace until we have a break of market structure. And also understand that whenever price breaks a particular market structure level on a particular time frame, it has a target in respect to the higher time frame. I repeat, whenever price breaks the particular, for example, let me look for an example here. Now, for example, we have our market structure level here. Yeah, at this particular zone. Yeah, you can see my cross here. Now, when price breaks this level, yeah, it breaks the level at this place. Now, when considering the break of market structure, we are looking at the body of the candle. Let me turn to candle because of those, the newbies. Now, we are looking at the body of the candle. Now, this is the break. This particular bar here gives us the break of market structure. Now, when price breaks this market structure, what happened? We saw what? Price going up to a particular target. It will always go up to the target area. When price breaks market structure level, it always go up to the target area, and which is, since we are having daily, that is the daily time frame, then it will always break up to the daily time frame target, 1 hour gives us daily time frame target. The primary time frame breaks give us the higher time frame target. The primary time frame breaks give us the main time frame target. Don't forget that. Now, don't forget we have the break of market structure here. The break of market structure around this particular place. Yeah, this particular place. This is where it breaks the market structure. Then price went up higher. Now, that is market structure for you. Now, we are going to take, for example, this. Let me look for a very good trend. All right, this. Now, let's take a look at this. Now, price went up. It went up at this particular zone. I'll be putting my rectangle so I'll be able to see the higher high. I'm doing this for a bullish side. Now, this is the higher high price created at this level. After creating this higher high, it forms our what? Our higher low. Now, this higher low automatically becomes our what? Our market structure level, because we are doing it for a bullish side now. Now, remember our rule. Price must break the lower high for us to pick the next market structure level. Price must break the higher high, the previous high. Now, it breaks this particular high here. It breaks this high and move up to this place. Now, automatically, this becomes our market structure level. This place. Now, what happened again? The same thing happened here. It breaks this particular high and give us another what? Market structure level. Yeah. Then it went up to this particular higher high. Now, let's look at what happened. It breaks what? Market structure at this particular zone. It breaks our market structure level here. Can you see? And what happened? Price decided to do what? It drops after breaking our market structure level. Can you see? Now, let's continue doing it for the sell side until we spot the reversal of this. Until we spot the reversal. Let's continue. Let's see. Now, price breaks the market structure level here. Breaks our market structure around this zone, right? Good. It breaks market structure here. Remember, this is our market structure level, this place. This was where the breakout came from. It breaks the market structure level, retest to it, didn't break above the market structure. So we are still on a sell trend. Now, let me give you guys some example here. Now, when we talk about a complex market structure level, this is it. When price make a what? A lower low, drops, make another move up, drops. Now, when price do something like this, some of us will consider this a break of market structure. No, it is not. It is not a break of market structure. It is not a break. Do you know why? Because of our rule. It hasn't broken our rule. Our rule states that it must form a what? A lower low for a new lower high to occur. Now, and that new lower high happens to be our what? Market structure level. Now, when we have this, a new lower low, good, then this automatically will give us a what? A new lower high. Now, what happened there? People will ask, why didn't I consider this particular area as a break of market structure? Yeah. The boss, if you look at the boss, I know you will ask, why didn't I consider this particular area as a break of market structure? Now, this is how a complex market structure look like. And I'm going to explain that now. Now, if you notice, when the price drops down, move up, form a lower low, lower high, form another lower low, this automatically becomes our what? Our market structure level. This place. Yeah. That automatically becomes our market structure level. Now, if you agree with me, our first rule states that what? price must close below the previous lower low for us to have a new market structure level. Now, if you agree with me, do we have a close below the previous lower low? Yeah. Yeah. We don't. We don't have a close. There is no close. This particular drop you are seeing here is the wick. And we are looking at the body. Now, this particular drop you are seeing might happen to be a wick. Now, if you look at it, there is no close below this lower low. And so, this is still our market structure level. Up here is still our market structure level. Price must break this particular place, this area. We must have a break of this area for us to consider. We must have a break of this particular area here for us to consider buying this particular pair. But since we don't have the break, now assuming price did something like this, it went down, then did this, fine, it will retest and go up. We have a market structure break. But in as much that it did not, instead it keep on ranging around this area and drop, it is not a market structure break. This is the market structure level here, the important one. Now, the idea behind this complex market structure is this. Like I said, price moves in pattern. Pattern in the sense that what happened in the higher time frame has already occurred in the lower time frame. So, what you are seeing here, this particular retracement, let's pick this particular retracement is as a result of what? Is as a result of what? The continuous movement from 1 minute. Price started breaking. Price breaks the market structure of 1 minute, advance to 5 minutes. Breaks the market structure of 5 minutes, advance to 15. Breaks the market structure of 15, advance to 30. Breaks the market structure of 30 and advance to 1 hour. Now, it couldn't break the 1 hour market structure around this level here. It didn't. And that was why, because the 1 hour is our main time frame, it didn't break the main time frame. Remember I said a break above the main time frame, a break of market structure above the main time frame for a buy signify a reversal. And since 1 hour happens to be our main time frame and there was no what? Break of market structure, market drops. Don't forget, what happened in the previous time frame is what they are going to repeat till they get to the main time frame. Then we break the 1 minute market structure, break the 5 minutes market structure, break the 15-minute market structure, break the 30 minutes market structure. Since the 1 hour market structure is their main time frame, they won't break it. Instead, they will retest that level and drop. And that is what happened here. They retested the 1 hour market structure level and they drop here. This is what happened. So this particular rectangle you are seeing is as a result of price moving from what? The 1 minute time frame to the 1 hour without breaking the 1 hour main market structure level. Now let's continue. Remember, we are from the buy side here. And what happened? Market breaks market structure here. Around this level. Yeah. Now, remember what I told you about the last wave. They will clear liquidity. That is what they did there. They cleared the liquidity around this level. They cleared liquidity around this level. Then they dropped the price. Break market structure to do what? To tell you that it is now what? A reversal trend. Market is now going to sell. And if you can look at the sell market, they maintained their sell position with market structure. So market structure also help us in what? In maintaining our trend. It should give us the real exit of a particular market for swing traders. Now let's look at the market structure for the sell side. Now don't forget, my rectangle represent the lower lower low that will be forming, while my cross horizontal line represent the market structure level. Now, Price drops to form lower low, went up because it did not close above the previous market structure level, which is this place. This particular place. Yeah, this top. Yeah. This is the previous market structure level. Why? Because what I just finished explaining, the complex market structure level. Why? Because there was no break. This was the lower low. This is the particular lower low that activated this particular lower high as market structure level. Now, since price has formed this lower low, this automatically becomes our market structure level. Now, price didn't get to our market structure level. Instead, it got to this place and retest, form another lower low. Yeah, can you see it went up? Now it went up how? From the 1 minute, 5 minutes, 15 minutes, 30 minutes. Then when they get to 1 hour, they couldn't take out the 1 hour level, and that was what price drop in respect to market structure. Now it drops to form another lower low. Forming another lower low, it gave us a what? Another market structure level. Yeah. Now this was too shallow. It gave us another what? Market structure level here by forming another what? Lower high, and form a what? A lower low here. Now forming another lower low here, market went and did what? Remember, I've explained this complex market structure system. They close above the 1 minute, respect the 5 minutes, respect the 15, respect the 30. But when they got to the 1 hour, they respected the 1 hour resistance and bounced down. They shoot down, they drop in respect to what the market structure of 1 hour, because that is the main time frame. And now what happened? Price drops, form another lower low. Form another lower low. Now if you look at this particular place, it's so complex. Can you see? Remember the complex explanation. Form another lower low. Now as at when price forms all this series of lower low, this is not our market structure level. Yeah, these places I put my rectangle are not our market structure level. Our market structure level still remains this. Why? Because this is the low. Remember, it must form a low for this to be confirmed as a market structure level. Now this hasn't formed any low for it to be confirmed as a market structure level. That is why this still remains our market structure level. And that is why when price drops below, here to form another what? Lower low, our market structure level automatically becomes where? Here. This particular place. Because this was the previous lower high before the low. Now what happened again? Price drops. Price drops, give us another lower low. Yeah. Remember our market structure level changed to where? This particular area. Yeah. Now people will ask me, why didn't I pick this place? It is still the same thing. I didn't pick it because it did not respect the rule. It didn't close. There was no close below this previous lower low. This particular trade have to close, and that was why we picked this. It closes below this particular lower low, and that was why this was our market structure level, because this was the lower high of the previous lower low. Now it forms another lower low here. Yes, we have another lower low here, and automatically this becomes our market structure level. This becomes our market structure level. Yeah, where the market, where the horizontal line is here, this particular place becomes our market structure level. Yeah. Why? Because we have a lower low break, and this was the lower high it makes after this breaks. Now price drops and form the lower low, and now you can see if this is our market structure level. Yeah, the BMS, it is our market structure level. If this is our market structure, price went down, move up, and did what? Touch, and break. Now we have the break of market structure at this particular place. This is the BMS. This is the break of market structure. It is called BMS. B for break and MS for market structure. Now this was the BMS we are looking for. Price breaks the market structure, then continue to move up, as you can see. Now it will continue to go higher in that manner to do what? To respect the market structure level. If you want to see the market structure very clearly without stressing yourself, you can just turn it to a line chart and you will see that price respects market structure everywhere and then. Can you see? It is market structure that moves the market. You can see it went up, moved down, went up, moved down, up, down, up, down, up, down, till this is our market structure here, till it continues going like that. It continues moving until we have a break of market structure level here. Can you see this particular area here? And once we have the break, what market did? What market changed? They cleared liquidity. Don't forget, they cleared liquidity, forming the last higher high. They drop, form another high. Now they keep on making consistent lower high until they finally did what? Drop price, following the same bearish market structure. And when they came down to the bullish area, they did the same thing. They cleared liquidity here, break the market structure level here, then they keep on moving higher. That is the market structure for you. That is what they do. That is what they do. They always respect market structure. Price respect market structure. So you can make use of market structure as your key support and resistance area. You can make use of market structure level as your key support and resistance level area. You can also make use of market structure level as your exit area, where you want to exit your trade. As you can see, this is it in the market, forex trading market. It's all about the market structure. They are key important zone while trading. Now, I want you to understand this, that every time frame has its own specific what? Market structure level. The lower time frame market market structure are used to do what? To predict our entry point. We want to enter from the lower time frame market structure, break of the lower time frame market structure, to what? Scale into the higher time frame market targets. Remember, when we are doing our analysis, we analyze from the daily, from the top down to the lower time frame. Now, when you want to execute, and our market, the schematic of market formation is from the lower to the what? To the higher time frame. So this is market structure for you. You have to study and understand how market structure works. It works 100% well. It works 100% well. That is it. They move, they find the low, form the higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Then they did what? They break market structure. They break market structure here. This is where they break market structure. This point. They break market structure at this point. Yeah. This particular level. That is where market structure was broken. And price will keep on doing what? Dropping. Price will always drop after the break of market structure. You wait for the retracement, then they drop. Don't forget our rules again. Price must close below the previous higher high for us to have a new market structure level. And the wave that will break the market structure must clear the previous higher high. The previous higher high. The previous higher high for a sell. For a sell, it must cross the previous higher high for a sell. It must clear the previous higher high for a sell. You understand? Sorry, the previous higher low. Sorry. Higher low for a sell. Yes. Then it must also what? Clear the previous lower high. The previous lower high for a buy. Now this is market structure for you. Market structure for you. So you can always ask me your question here. You can drop your comment by asking your questions. I'll do it to answer them, and also see how I can make them into a video for you all. So you can drop your questions below in the comment section. Don't forget to subscribe and like our page. Thank you, and God bless you.
Knowledge first. Thanks for watching. Subscribe.